Hello, traders. Today's theme is it's fake. What does that mean? I'm going to show you in just a minute because we are constantly trying to determine if a move is real or fake. So I'm going to set the longer term context and we're going to get into it. And it's critically important because once you have an overall view of what's happening, then you know how to position yourself. You have staying power and you have confidence in those positions. As you know, I've been bearish. And Starbucks was my pick this week. It came out Sunday evening. So let's take a look at the price action and what actually happened. Here you can see this is where the video came out Sunday morning. I had no idea what the overnight futures were going to do. As it turns out, they jumped up big time, about a 60-point gap up Monday morning. What did Starbucks do? It gapped up with the market, but it did not fill its gap from Friday. Okay, that's a little bearish. And then we got a nice long red candle. It is very difficult to trade against the market. However, we're going to take a look at that in just a second. And you'll be able to see that the rally that we had on Monday was short-lived. It lasted about an hour. And then the highs were in for the day. What did Starbucks do? It leaked lower the next 2 days. Right in here from $98 down to about $94.50. What a great trade. I hope some of you got on board that one. Yes, the stock is jumping this morning. We have been in and out of bearish positions. We are fighting a bounce, a market bounce. And right now, I'm suspecting that the market bounce might have run its course. So really nice trade in Starbucks. I got a really nice one lined up for you today. It is on the short side. What's all this talk about fake or real? There's your rally on Monday, and I am going to try and keep this video short, by the way. Please click the thumbs up button. If this video is helping you, let me reach as many traders as I possibly can. That's the point for all of this. If you're making money on these, by all means, please click the thumbs up. Subscribe to the YouTube channel and turn on your notifications and you won't miss any of these videos. So we get this big gap up and you can see that within the course of the first hour of trading, the market did nothing. That's good because that's what we want. When we are getting an oversold bounce, we want buyers to be wimpy, not real aggressive. We don't want to see long stacked green candles. And what did Starbucks do? The market's floating higher and the stock continued to crumble. Even yesterday, the market was making a new relative high and the stock continued to crumble just like that. Beautiful stuff. That allows you to stick with the position. Now, Starbucks isn't going to fold overnight. There's not any massive company news. It's a nice, decent round of selling. I still like Starbucks on the short side, by the way. I like it a lot. I would be looking to reload on my Starbucks short for a longer period of time because the D1 chart tells me this is a weak stock. That is a weak stock. That is a wimpy bounce. The next move is going to test that 200-day moving average, and I believe it's going to break down below it. Just have to be a little bit patient, and it's choppy. You can see that in here. So that was a really nice trade. Let's get back to the market and talk about what's real and what's fake. So the first thing you have to do is you have to zoom out, get your longer term perspective. And in this case, what's real? This rally is real. See how nice and tight and orderly that price action is? Okay, well, I'm going to expect a dip somewhere along the line. And when we do get one, it flies off of the 100-day moving average. It doesn't even touch it. Zoom. Okay, so now we get into a period where these dips are getting to be more frequent. The dips are lasting longer and they are deeper. That is a sign of selling pressure. And that is what prompted me to take gains on bullish swing positions on December 6th. Please go back and watch those videos. Confirm what I'm telling you, we were out before the first drop. And now we went into day trading mode because we should have seen really strong buying into year end, and we didn't. Instead, we got this light volume garbage. That was another confirming sign that the market was going to roll over. So is this move real, and is this bounce fake? Yes, that's exactly what I believe is happening. That is how I'm positioning myself. So I'm looking for the bounce here. I don't mind having the bounce here. I'm expecting it because markets don't go straight up or straight down. They tend to move around a lot, and we get a lot of back and forth. So when it gets oversold, we can expect a bounce. How high would the bounce get? Well, the 200-day moving average has been the first target that I've mentioned. This blue line is SPY 585. That also is in range. If we test it, and it's looking a little unlikely to me, how do we want to test it? What would tell me that buyers are passive and that sellers are aggressive? How do I determine if it's real or if it's fake? Well, I want to see it struggle to get up to 585. And then perhaps we have a gap up one day, and that turns out to be a gap reversal, and it turns into a bearish engulfing candle. You finally reach the point where sellers have had enough, and they are in force. They drive the market down, they get aggressive, and you blow through that 200-day moving average. That's the type of confirmation that you're looking for. So on that bearish engulfing candle, boom, I'm taking short positions and I'm adding on a breach of the 200-day moving average. That would be a fairly passive approach. What I will do is if I see stocks that are relatively weak, and if I see that struggle for the market to go higher and it just can't, that's because sellers are keeping a lid and they are aggressive. That's why the market can't fly higher. When it flies higher, you know that buyers are in control. And you're going to see heavy volume. You're going to see stacked green candles. It's just not happening. I've got all the fundamentals to support my thesis. I'm not going to get into them, but I will tell you that global economic conditions are deteriorating. Okay, well, I've got technical evidence, and that's all I really need. So how did we bounce in here? What was that like? Was it strong? Heck no. Look at these mixed overlapping candles in that minuscule, tiny volume. It falls right off. And as we get into that 200-day moving average, most of the move was just that gap higher on Monday, and then we flatlined. Well, here we are testing that 200-day moving average once again today. So we'll take a look at that 5-minute price action. Again, everything leading up to the high in December told me that the move was exhausted. So it's not just this candle or that candle or this little, it's the overall context, and you're reading the price action as the move is unfolding, and you're gathering this information and you're getting those tells. And so when I'm getting bearish in here, suspecting that a decent drop is going to come, and then I get confirmation, and this was a pretty decent drop, especially into seasonal strength at year end. You don't normally see this. This was another sign that yes, the market is starting to hit resistance. When you get a 10% drop in a month, that is a big, steep, swift move on heavy volume. Yes, it's legitimate. So any bounce is going to be fake, and that's where I have my mind. That's where my focus is. How am I going to take advantage of the next drop? What will I be watching for? I've just told you. So when you take a longer-term bearish swing trade, if you are early, then you also have to have the mindset that I'm going to keep it small because I know I'm early and I know that I'm going to have to weather a possible drift higher. I'm going to probably have to take a little bit of pain. And that's okay, because I'm able to monitor the strength or weakness in the stock. So as the market rallies, what am I looking for? I'm looking for a stock like Starbucks that is struggling to maintain its bid, because that is telling me that longer term sellers are unloading some shares of stock. When the market rallies, I want to see stocks that have fallen below technical support struggle, 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 struggle to get back above that technical was support, now resistance, can't get back above it because sellers are still there. And then when the market finally rolls over, the bid is going to crumble on those stocks and they're going to fall very quickly and they'll have a market tailwind. And instead of having to initiate all those starter positions, you'll have some points on the board. You'll be able to see how they respond to a market rally and you'll be ready to add on confirmation. So then the market rolls over, bearish engulfing candle, add if the stock is weak. Breach below the 200-day moving average, add if the stock is weak. Rolling over, upward sloping trend line, breach to the downside, heavy volume, add to your bearish short swing position. That is how we trade. So I'm going to give you another stock to look at from the bearish perspective. No, you do not need to short this today. Put it on your radar, set alerts on it, especially on the downside, so that when it breaks key technical support levels, you get the alert, you're aware, you're watching what the market's doing. Hey, market looks pretty weak in here. Awesome. The table is set for a nice bearish swing position. So I'm going to go through my lists here, and I'm trying to think of which stock was popping up on my lists. There it is. It is on Red Royal Flush, which is one of my favorite searches. Why do I think this is a good short? So you've got earnings. After the close, stock plunges. That was a big drop. We've had this market rally during the course of the last week, 2 weeks, let's call it. What has the stock done? Nothing. It's flatlining. Well, how is that bearish? It's bearish because it hasn't followed the market higher. Red line below zero, relative weakness. That's what the market has done. If this was oversold, you would have buyers coming in here to scoop this stock up, and they would drive it right back up, and it would easily fill that gap. That's not what happened. The market rallied, and even in this type of market rally, there were plenty of sellers keeping a lid on this stock. It also had to digest some of those losses. Same principle on the upside. When you got a big gap higher, it takes a while for that to be digested, for some of that selling pressure to come out, because a big drop like this is going to attract some buyers. They're going to perceive this drop as a good entry point and a good value. And so they'll come in and nibble, 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 nibble. But the selling pressure is much heavier, and that's what's keeping a lid on the stock. Now you can see there's been relatively light volume in here, but today we had really nice volume. This is a choppy stock. So what would you want to see? Well, you're going to watch the stock and you're going to watch it relative to the S&P 500. You're going to be watching this breakdown here. We're below the 200-day moving average. Do I think the market's going to hell in a handbasket? Not really, because there's not a lot of news to drive the market right now. Next week, we've got a lot of economic releases. That's probably a better chance for the market to stall out on this rally. And then we've got earnings season coming in about 2.5 weeks or so. That's probably when we're going to start seeing some market movement again. But until then, I think that for the next few days, for the rest of the week, there's not really much to drive the market. So we'll be watching to see what happens around the 200-day moving average. Maybe it holds, maybe they test it a bit longer, maybe we float a little bit higher. There's no reason to get aggressively short right now. Not on this bounce. We want to make sure that it gets as high as it can, and we want to see it stall. And then Marvel will be a stock that we're going to be watching. I'm going to set an alert right here on the low of the day. This will be a longer term bearish swing trade, and my expectations are that the stock is easily going to be able to take out this low and then some. So now all of these buyers who viewed this as a possible good entry point, especially with a market bounce pending, they're in here, buy, 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 buy. Well, the sellers are whap, 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 whap. How many more you got? This thing is not lifting off. So the next move lower could be about equal to the size of that gap. That would be a target that I would set for it, but stock is weak. Longer term, I like getting short on this one when the market also hits its resistance point and starts to roll over, but I want to see this stock crumble as well, okay? So I don't want to see this relative strength. I want to see this little horizontal support level with these trend lines fail very easily, and when it does so, I'll know that it has a nice clean path lower. This particular tech stock, it's really choppy and it doesn't move a lot. Oh, cool. We got a bearish explosion alert. Let's take a look at it and see what that stock's doing. Double top. Decent volume. It's been a pretty big runner. Pharmaceutical stock. It's got some volume. That'll be something to maybe keep an eye on today. Otherwise, the market's relatively quiet. You can see that we barely got above the 200-day moving average, and now we're testing it already. If SPY takes out the low from March 24th, that was the gap up on Monday, what am I going to do? I'm going to set an alert there because that will tell me that this little breakout was fake and that the market is ready to resume its move lower. I'm not going to guess, but this would be a pretty nice fail, especially if it happens on heavy volume. If I get it, I'll note it. Otherwise, I'm going to look for a little leak higher. That'll give me more and more time to hold off on my bearish swing short positions. And the higher we go from here, the better my entry point, because we'll have more room to fall. Again, please give it a thumbs up. Please subscribe to my YouTube channel. Thanks so much for watching, everybody. I will be doing a video on Sunday, and we will see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.